Well, the highly anticipated unemployment report just came out, and the good news was it hit 4%. We haven't been there in quite a while, and the Federal Reserve wanted that. I'll show you the headlines right through here. So unemployment rate edged up to 4%. However, there's some bad news in the report. There's 272,000 people that just got new jobs, and also wages are starting to tick up, and that's what's kind of spooking the market this morning. So without further ado, let me take it over to Rick Santelli at CNBC. I'll let him give you the breaking news, and then I'll come back and tell you the market reactions to all this. So, Rick, take it away.
By at the CME in Chicago, and Rick, take it away.
Yes, it's the big jobs report. The change in non-farm payrolls stronger than expected. 272,000. And if we look at revisions over the last couple of months, we lose 15,000. Now, let's go through it all, shall we? If we look at the unemployment rate, for the first time since January of 22, it hit 4%. Yes, 4%. And if we look at month-over-month earnings, well, month-over-month is stronger than expected, up 0.4%.
Now, here's where the kind of the wheels fall off. So I want you to pay attention to the earnings on this. But then I have some highlights to show you guys in where maybe a lot of this money's coming from. So take it away.
Up 0.4%. Why is that important? Because that is the juiciest increase since the beginning of the year when it was up 0.5%, and the 0.5% was the highest since March of 22. So we're moving back up a bit. Now, if we go from month over month to year over year, also stronger than expected. 4.1%. That equals March. To find a higher number, you go to February when it was 4.3. We started out the year at 4.4. If we look at the average weekly hours, 34.3, exactly as expected, exactly like the rear view mirror. Labor force participation rate, actually moving down. 62.5. The recent high watermark was 62.7. That was last month, and that was the best going back to November of last year. But this number at 62.5 equals February. To find a lower number, you have to go all the way back to January of last year. And finally, what we call U6, or the underemployment rate, versus U3, which is the one we talk about, which just popped to 4%. This one remained at 7.4%, where it was last month. But that is the highest level since November of 21.
So what he's saying is the jobs are coming back. But what's really affecting things is wages. Wage growth is kind of getting up there. So we're seeing an immediate reaction with the bond market right now. MBSs are down 35. If you know anything about this. If you don't, let me explain it. This is what's going on with mortgage bonds that trade on Wall Street, okay? This is the price of the bond, the reaction that we just had. Look at this reaction that we had. If we go to a one-day chart, it just plummeted. Okay, what this means is when the price of a bond goes down, the yields or interest rates go up. That's what we're seeing right now. So this move right now is going to probably uptick rates on the 30-year to about 7.2. And this is where it's really volatile, where you guys, when you're trying to compare interest rates and so forth, the markets are completely volatile. And that's why a lot of people are choosing us, because we take the burden of all, checking out rates all over the country and put that in our lap. So I'll explain to you guys what I do at the end of this video. I think you're going to be intrigued on that. I'm a mortgage loan officer, licensed in all 50 states as well as Puerto Rico, but I'm also a huge mortgage broker. So I'll explain that to you here briefly. But if we go over to here, and here's the U3 and the numbers that he was talking about on the employment numbers. So I want you to see a pattern here, though. Okay, so the first thing we usually look at is right through here, the U1 personal unemployment rates, but the headline numbers right through here, the U3. Okay, so the U3 is telling us right now the unemployment rate is 4%. He mentioned the U6 at 7.4, but let's look at the trend. Where were we? And where are we now? So if you go down through here, this is where we were May of last year, and now where we are May of this year. And again, guys, these are the unemployment numbers. So you go from 1.3 to 1.4. Okay, it's at least going up. And again, it's unemployment. This is what the Fed wants. The U2 went from 1.6 to 1.9. The unemployment rate, this is with the Moneyball number that the Federal Reserve watches. It went from 3.4 to 4. Everybody wanted the 4 number. Now you got it. The U4 went from 3.6 to 4.2, 4.3 to 6.48, 6.4 to 7.4. So it's showing us the numbers of the unemployment is going up. And that is in the realm of, that's right in the wheelhouse of what the Federal Reserve wants. So here's where the job numbers came in. If you're in healthcare, we truly need it. We are way understaffed when it comes to healthcare. The government, they always need to hire. I don't know why, because you go into every place and everybody kind of seems to be, whatever. I'll leave that at that. And then leisure and hospitality. If you've been out to a dinner or you've been traveling at all, you know that leisure and hospitality is way, way, way understaffed. Now, the last piece of this puzzle I want to show you guys is how many people right through here, how many people have multiple jobs? Okay, so if you look through from last year to this year, okay, last year people had multiple jobs total in the workforce, 99,000. Okay, or the total not in the workforce, 99,000, and people went back to work. You can see that right through here. Okay, total multiple job holders went from 7,700 to 4,200. That's kind of a shocker. So that might not, fill that void there. Percentage unemployed went from 4.8 to 5 and so forth. So maybe that's not where that additional income is coming in at. I don't know, but people are making more money. And you guys, I'm going to get grief down below. People are going to say, Dan, I'm not making any more money. I don't have any money and so forth. But guys, the numbers are the numbers. Okay, so now who am I and what do I do? Okay, my name is Dan Frio. I'm a mortgage loan officer. I'll put it that way. I can help you with a mortgage. Okay, so if you're out there looking for a mortgage, here's what happens. And this is a perfect example. You might have got a quote yesterday and your quote was 7%. Okay, and you didn't lock in. You keep calling around trying to figure out who's got the best rate in town. You're going to see this uptick. Let me see if I can refresh it and see if you can see where that goes. It hasn't changed yet, but this is probably going to go to about 7.2. So if you didn't lock yesterday and you got all these quotes, now you're back to square one again. So why not use me? Okay, you watch me hopefully every day, and hopefully you find some credibility in me. I'm actually a loan officer. Again, licensed in all 50 states as well as Puerto Rico, and I'm also a large mortgage broker. I'm set up with, at this time, the last count we had was 35 different lenders. Yep, that's getting revised on a daily basis, but there's 35 different lenders. So here's how we work. I work at a federal bank. I might be able to place your loan at our bank. However, I'm set up with 35 other places. So that means I can use their products and their rates. So let's say I don't have the best rate in town today. Okay. I'm already established with all these other banks that I can use their products. That's what we can do for you. And so instead of you going out there and applying at 10 different places, putting in all those applications, all those credit pools, all that chasing your tail, let us help you. Okay. It's as simple as this. First thing, before you do anything, check and see if there's any grant programs available for you. Right through here, there's grants up to $7,500 that are completely forgivable. You don't have to pay it back. A lot of the student loan stuff. But the next thing is now you're like saying, Dan, okay, now what's the next step? Okay, well, put in your application. You can click the apply now button right through there, or you can scroll down to the bottom right through here and you're going to find our 800 number as well as my email address. And we'd love to help you. So that's it for this morning. I'll come back later this afternoon to show you the repercussions of what all this did to mortgage rates. And then I'll give you an update on where we basically settled for the day. So thanks for watching, guys. I'll ask you one question. If you would, or one favor, please hit the subscribe button down there so it helps me get noticed by more and more people so I can help more and more people in real estate in 2024. Thanks for watching, guys. Take care. I'll see you in just a little bit. Bye-bye.